I'm coming in hot.
Hey traders, it's Dax here again, back at you. I want to, welcome to my channel. Thank you for viewing. This is going to be a really cool video today. I've discovered some more stuff. I had some clients reach out to me and tell me about how they were trading the 30-year Treasury bonds and how they were picking up signals left and right when it comes to going short and going long on the 30-year Treasury bonds. The current instrument name is ZB. It's up here in the top left corner. So I want to show you guys what we can do as futures traders and how this video is going to be a treat for you futures traders out there and for anyone who's interested in trading futures. So I want you guys to pay really close attention because this is going to be a really cool video with how we can really capitalize on some incredible signals that my hedge fund levels are picking up inside of the futures market for the 30-year Treasury bonds. I was shocked when I saw this because I haven't been trading this market for at least in the Treasury bonds market, that is, but I'm a big futures trader, and I'm going to probably be trading a lot more in the 30-year Treasury bonds. So let me show you guys why, and let's get into the video, okay?
Alright guys, welcome to the video. So I want to point out to you guys first, if you're new to the channel, I want to let you guys know how the hedge fund levels work and what they are and what the colors on the screen represent for each arrow that you're looking at. I know it looks like arrows and you're like, well, this is just a bunch of arrows. How do I know what to do here? What am I looking for? So let me go into details and explain what some of this stuff means first, okay? So currently you see these green and these red arrows. So these are, what these are basically a volume flush of liquidity that enters the market based off of a major institution that's stepping in to take a trade. So you have big institutions that are coming in all at once and they're pushing the market in a particular direction. So in this case, from this point to this point, you had a big volume flush of buying that came in. So that's why this arrow printed up to the green level. So that's where this comes in. So right here, you have a push to the downside, and that's why you have a lot of selling that came. A lot of institutions came in and they sold. So my hedge fund levels are built around volume and time. So that's how they're designed to pick up these levels, these very key levels where the most volume and the most selling and buying is taking place. So that's what they represent. That's what the arrows represent. So basically, when I look for entries, I'm really looking for, on average, I want to find 3 falling greens or I want to find 3 rising reds. That's on average. 4 is okay and 2 is okay. But really on average, for the good sweet spot, you want to look for 3. But 2 is just as strong. It all depends on the market. So it depends on your varying markets because based off of the type of speed that the market moves, as you can tell these days for the treasury bonds, they don't move very, much. It's very narrow and and this is really how it kind of, you have to find what's relative to your market. Like the NASDAQ will move crazy all day, so you get different prints all different day, different directions, different types of opportunities, different setups. With certain markets, you might just get a particular single direction move, and that's all you're looking for. That's fine, but that's why you might only have 2 good strong indicators for the hedge fund levels versus like 3 or 4. So I wanted to also point out what the bar look back is and how you determine what is an appropriate bar look back setting for your hedge fund levels of your particular market. So in this case, I'm using a bar look back of 4. So the bigger the number on the screen, the less hedge fund levels or prints that you'll get on the screen, meaning the less arrows that will be printed. So if I put this up to like number 20, you might have maybe only 1 or 2 on the screen because it's such a smaller condensed market based off how the market moves based off of big buying and big selling. It's not a very fast, rapid market. So if I brought this down to a 1, maybe you'd see a lot more arrows printing on the screen. Okay, so let's get into the video. Enough of that. All right. So I want to point out how this works. So like I said, falling greens is if you want to look for a long position. So what we're looking for here, falling greens, there's your break to the upside. So this is really done based off of trend lines, and forget a bunch of indicators, guys. I'm not a big fan of indicators. I use, one with the MACD, but I use the MACD in my own way. I've replicated it to my own way. I've customized it in a way where I've made it for my own settings, and I've got that in some other videos, and I'll use it in some other videos later on, but not for this one. I'm a big fan of divergence. So using divergence in conjunction with my hedge fund levels is really strong. It's a very good indicator for what the market's about to do next. But there's something magical about trend lines, guys, and I want you guys to get used to using trend lines because trend lines are a thing of beauty, and that's what my hedge fund levels are built around. So you get a level or a trend line that gets broken to the upside, there's your trade, there's your entry, and there's your move, right? So that's just one, guys. I'm not even at the good stuff yet. Let's keep going, all right? So this is just a few things I want to point out. So here we go with another one. There's another entry. Now some more. The upside, just like that. Break to the upside, break to the upside. Some more. All right. See, are you starting to see the trend? These hedge fund levels present themselves all the time. To the upside. These are these cups that you're grabbing. This is where it comes down. It's bouncing off certain resistance, certain support levels, and that's how you're able to capitalize these trades. And that's what my hedge fund levels are built around: support and resistance. All right. So let's look at some more examples. All right. So I want to start showing you how you guys can start swing trading this. All right. How you can swing trade this and really looking for the cups. So here's a really good entry: falling green, falling green, falling green, falling green. Just draw this here like that. Your entry, or if you want to be a little more conservative, it depends on the kind of trader. Are you more an aggressive trader, or are you more of a conservative trader? So if you go, you can basically draw this out like this. Let's take it from the top. I like the top better. So there's your entry. There's your conservative entry to the upside. Boom. So it's the beautiful thing about my hedge fund levels is that they're forward-moving indicators. So you're basically waiting for the arrow to print, and then you're taking the entry. So it's not like something that's lagging. You're not waiting for a lagging moving average or a MACD or an RSI that's lagging. You're getting the entry based off of the forward-moving indicator when it prints. Okay, so let's take some more examples. I'm just going to go over all these because I want you guys to see how consistent this is. You're just waiting for the arrow to print. So here is another one, just like that. Just like this. Let's go over some more. Just like this. Boom. Some more. Just like that. You're just waiting for the arrow to print, guys. That's it. That's all you're doing. You're just waiting for it to print. I'll show you how you can catch a short right here. Markets have been in a big bullish uptrend, so you just want to wait for there's a lot more buying in terms of going long opportunities in the market right now. But there's your short right there. Either go to this one right here, or you go to this one right here, and there's your break to the downside. There's your short. So, yeah, guys, if you can see what we're doing here, here's a short potential right here. Shorting it. Hedge fund levels don't lie. All you're waiting for is just for the price to go, for it to print, and there you go. That's your entry. So I think when I was calculating this short out, this came out to a $5,000 move. So that is a massive play that you guys could be capitalizing on. I could be capitalizing on, and I'm so glad this one particular client of mine who reached out to me and told me about to be looking for the bond markets, because man, there is just something incredible about the bonds that are just telling us when to go short, when to go long. They're very consistent, and I'm going to be looking into them some more. So it's a $5,000 potential move. Just from swing trading that, guys, that is an awesome move from here to there. $5,000 potential move. We're not trying to get the full 5,000. That would be stupid to think that you can get the full 5,000 because it's just too unrealistic. You're not going to get it from start to finish. You just want to get a piece in between that. So anything in between that is good. Would you be happy with $1,000 out of that? I sure would. Would you be happy with $500 out of that? I sure would. So if you grab 3,000 out of that, that's a pretty good move. So I just want to show you guys this is what the power of my hedge fund levels are doing. If you like what you saw here, please get in contact with me. Just reach out to me by email or contact me by phone. My phone number is in the outro at the end of this video. You guys, I can also set you up with a one-on-one demo. I'm happy to set you guys up and go over it one-on-one personally, so I can show you guys how it works and give you a free license key so you can also try it out for free before you purchase. And it's just something, guys, if you have any more questions, please reach out to me and let me know what you're thinking. I'm happy to set you guys up. All right, guys? Remember to like and subscribe and hit the bell so you guys can get more notifications on how to use the hedge fund levels. All right, guys? Best of luck and happy trading.